Hello and welcome to the Gold and Silver Club end of week review non-farm payroll special that we have for you today on the 4th of April 2014, presented by myself, Phil Carr, and Nick Kalsi at the goldandsilverclub.com. Today, we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for the commodities. So we'll be looking at gold, silver, oil, natural gas, coffee, among other commodities. We'll also be looking at our top trade of the week. We'll cover live market commentary and technical analysis, and we'll look at the week ahead. So the 6 major news announcements which will affect the markets today and moving into next week as well. And of course, we'll be answering any questions you may have too. So gold price this week, well, we are seeing traders anticipating March non-farm payroll reports today. So the most important US economic report of the month is the U.S. Jobs Report, non-farm payrolls. The Department of Labor will release the latest employment data today at 8:30 a.m. New York time, 1:30 p.m. London time. And overnight, gold prices, they edge slightly lower. We're seeing a little bit of a bounce this morning as some traders exited some positions to await for March jobs reports. Traders are hoping the non-farm payroll data will shed some light as to how the US recovery is unfolding and indicate how fast the Federal Reserve will unwind its monthly bond buying program. So at the Gold and Silver Club, our analysts forecast a 200,000 increase in non-farm payrolls in March, which is in line with consensus expectations. We view the reasonably solid February gain of 175,000 as providing some confirmation that the underlying trend growth rate of payrolls remains strong. We also expect the unemployment rate to decline by 6.6% in March. The 2 likely scenarios traders can expect today is better than expected reading above the 200,000 jobs general consensus. And this outcome will be bullish for the US dollar and bearish for the precious metals, or on the flip side of that, a weaker than expected reading below the 200,000 job consensus will be viewed as bearish for the US dollar and bullish for the precious metals. So either way, the report is likely to create volatility, presenting traders with highly lucrative trading opportunities across the market. So we are due in the next 2.5 hours that non-farm payroll report, which is going to have a great impact on the markets. Before we go into some technicals, look at the top trade of the week. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial TV. That's some background on the Gold and Silver Club. We'll just take a look at the gold price at the moment. We are getting a bit of a bounce this morning. We're currently trading at $1,290 an ounce and 40 cents. So we'll take a look at the technicals on that very shortly. The top trade of the week using the Gold and Silver Club signature trading strategy was in fact a really nice breakout move that we got on Brent crude oil just yesterday. Came down, tested a major level of support and trend line on Brent crude oil. You can see our entry there, just getting in from that nice bounce of 104.92. Risk on the trade, 45 points. Each lot traded $450 risk for a nice 135-point gain just in that afternoon for $1,350 profit on each lot. So for a nice 3-to-1 very quickly there on Brent crude oil yesterday. That's our top trade of the week. And what we'll do now, we'll move over to the live technicals now. We'll do some live technical analysis. The first chart I want us to take a look at will actually be the US dollar index. So let me just bring that up for you, and we'll just take a look at how things are starting to look panning out before the non-farm payroll today. Okay, good. So you should see the US dollar index screen at the moment. So currently the US dollar index, it did a good job midweek. It managed to actually close and get above the 50-day moving average and also this downward trending trend channel, which we have been in since about the beginning of February. So this lift did create some pressure on gold midweek. At the moment, we are above some key moving averages on the US dollar index. Now, if the US dollar index can put a rally on today and break above the 80.72 level, you see that just above, we've got that key resistance. We'll be looking for a move here towards the 200-day moving average, which sits currently just shy. It's around about the 81 level here. So that's what we're looking at in terms of a breakout on the US dollar index here. If the data is positive for the US, we could see a breakout. We have already started to get a nice confirmation of a move higher here, but obviously we are going to be awaiting further data this afternoon. If we were to get a sell-off here, and this is going to be resistance, and we're just going to come down and give back all of the gains and come back to the 80.25 and around the 80 level, which was the low of the week here, what I'd be looking at for that occurrence is a breakout to the upside for gold. So we play the inverse correlation. You'll see the correlation play out the best during news announcements. So we'll be definitely keeping an eye on the US dollar index today as we get the breaking news for non-farm payroll. But we do note prior to the non-farm payroll that the US dollar index is doing quite well at the moment. It's fairly strong. If we take a look at gold, gold still remains in its downward trending channel here. It is trying to build a little bit of a base, actually. It's staying below some key moving average. You can see it's actually still below the 200-day moving average. We came down and hit one of our sell short profit targets earlier on this week at 12.76, where the market has actually managed to get a little bit of a bounce here. We're just seeing a consolidation at the moment, and really we want to break out of either the weekly highs here, which would see us break above 12.95. If we can clear 1300, we should see a lot more buyers get interested, and we could see a nice move higher here. I would say that is really the key level to break today, 1300. There are some opportunities from a break also, 1293 here up to 1300 for an earlier move, but really you'll start seeing more traders get interested if we get a move back above the 200-day moving average, and we can close above it. Most importantly today, if we can close above the 200, that bodes well as we move into next week. Now, on the flip side, you can see the major level of support here for gold is 12.76. That is where it's got a major Fibonacci level. That's where we bottomed out earlier on this week. If we break through that level, we'll then be looking for movement down here to about the 12.72 and 12.62 below that. So we are just purely consolidating at the moment on the gold market. We're just moving between these. We're ricocheting just between these support and resistance levels currently. And we want to see a breakout in either direction. And the US dollar index on non-farm payroll and the figures which come out will give us the direction. We'll see a breakout to the upside or breakout to the downside. The other scenario I would look at is possibly the market coming up to 1300, testing that level and turning around again and coming back down, or the market selling off, coming back to 12.76 and then finding some support and coming back up. So I would just show you very quickly these three scenarios because gold's going to be in play today. Always gets volatile around non-farm payroll. So this is what I'm seeing. Either we are going to get a breakout on bad USD news, and we're going to see something like this. We'll see a breakout, come back up to 1300 and maybe test the 50 MA and come up to about the 1310 level, possibly more. If we get negative news, what we could see is a breakdown below 12.76. Then we'll come down to the next key levels. The other side of the coin here is that we'll come up and we'll kiss 12.98, the weekly resistance. We'll come back down and we'll reverse, and we will just continue to consolidate within this channel. And so it's essentially, it's a buy at 12.76 and a sell at 12.98. So that's the three ways I see this going today on gold, and that's what we'll be looking to play those trades. We just want to take a look at, we'll take a look at the softs very shortly. Sorry, the energies very shortly. I want to take a look at the softs because we've had some really nice swing trade opportunities this week. This is the wheat market. On wheat, you can see actually go over to the weekly. We had a really nice inverse hammer there on the weekly, which is actually, we've seen that preempt to move lower this week. And you see on the daily here, we turn lower, broken through some major support levels. And we're currently sitting around 66475 is the next support level to break here. I would like to see that level broken, a continuation of this downward trend. We're starting to see everything cross over. We've had a really good, strong February on wheat, had a huge move to the upside, And now what we're looking to capitalize on is just a pullback here at the moment. So there is a little bit of a trend line where we may get a retest, which will take us to around the 200 MA at the 641 level here. So we may get that kind of a move back here if we can see the market just come down and break this fib level and just come down here and trickle down and meet the market, meet the this trend line, major Fibonacci level, and just meet the 200-day moving average. And that would be a really nice trade. It's a trade that we're already in at the moment. We're looking to hold this position at the moment with wheat, sell short. If we take a look at, we'll just take a look at the energy. Energies have had a really nice move over this week. So particularly yesterday, we caught some good breakouts here. We'll take a look at Brent first. You can just take a look at the trade that we actually got on Brent yesterday. Actually come up to and hit a 4-1 now. We just quickly remove that, and you can have a look at this a little bit more clearly. So we had a nice level of support here, right at the Fibonacci 103.95. There is actually a nice trend line here, which followed perfectly as well on Brent crude oil, and we had a big breakout. We've come and found a bit of resistance at the 106.64 level here. We normally see crude oil and Brent fairly active on non-farm payroll. We'll be looking to see if we're going to get further breakouts to the upside here. You can see this channel, which we may be able to just draw an additional, there you go, an additional trend line here. I think we've really broken that out to the upside. So we look like, I'll be looking for a retest of 106.92 here on Brent crude oil and seeing if we can really get a good close here, finish on a nice weekly. You can see we've got a weekly Dragonfly Doji here, which is showing that we've got a capitulation. The market's come down, tested a key level of support, and we've had a lot of buying again, remaining still in an upward trend overall in the weekly time frame here. So looking good as we come into the close here on Brent. We've made our money probably already on that trade for the time being. It's one of our top trades of the week, but we'll see if there are any additional opportunities on non-farm payroll today. This is WTI. WTI potentially has more room to go here from the break above 101 up to really, it's probably about a 100-point move up to about 102.21 is the next major. You've got a whole cluster of fib levels at this key area. That's what I'll be looking at for a potential breakout here today. And if we can break above and clear 102.21, we'd be looking for a move up to 103.44, which is the next significant resistance here. You can see we are still staying in an upward trending channel here. It's just on the daily chart. We've managed to clear back above some moving averages. We're staying above some, finding support, some key Fibonacci levels as well. So we're going to be keeping an eye on WTI today as well during the inventories. We'll also take a look over at natural gas. Now, natural gas, you can see here where we came down this week. We again found support at a previous key level of support, which is the 4.216. We actually got a nice rally yesterday on the natural gas inventories, and we've since, at the moment, we're stalling a little bit. You can draw in essentially two trend channels here, and I would do those if you trade natural gas. Just take a note of those because we are forming an inverse hammer here just on the daily time frame at the moment. On the 4 hour, you can see the market just selling off a little bit here. Nice inverse hammer. We're just seeing the market. We could get a continuation of this downward trend. Natural gas is normally quite active as well on non-farm payroll. So these are the trend lines I'd look at. You've got a trend line here, which is kissing really 3 levels here. So you've got one, just bring that down ever so slightly. 1, 2, 3. And also you've got a larger trend channel here that we can draw on as well. We're trying to hit as many levels as we can there. So I would say that we could be in for just a retest. If we, you can see the parabolic SAR is just showing a sell here. If we see the market come back down, we could see a retest of 4.291. And I'd be really keen to see if we do get a sell-off in natural gas, that we can break through 4.216 and just come down here and get a nice move to the next Fibonacci at 4.124. Natural gas daily volatility is pretty decent. It's normally about 250 to 300 points a day, very day tradable market. So we'll definitely be keeping an eye on natural gas during the non-farm payrolls today. Just moving over to some of the other metals as well, the industrial metals. Copper is actually managing to just build a base here. We discussed this last week. We had a V-shaped reversal setup, which is just playing out quite well at the moment. So here's your V, and we just got a nice breakout from that to the upside, and we're just continuing to consolidate. Came down, retested the fib level yesterday, and we found a nice little hammer that's confirmed to the upside, and we're just working our way out here of this building a base here on copper at the moment. It's got some work to do to the upside to really to put in a move back to its 50 MA here, but we could continue to see copper just slowly grinding higher here. We can extend this trend line, in fact, a little bit higher here. And I would be looking for some further movement to the upside. It's a good swing trade that you can have here on copper. It's sort of trade that you want to be holding over a week or two. Just really let it work its way back to its former support levels, which may provide previous resistance, which are quite a way away. Really looking for a move towards 3.15 and 3.127, just above there. Taking a look at silver. Silver, a little bit of a similar pattern. It's not performing as well as copper at the moment. We can just see if there's any scope to draw another trend line here. I mean, there's another trend line which is developing. You can see 1, 2, 3 bounces there. We seem to be forming a little bit of a base here on silver as well. I'd like to really see silver come up and break above 2014 and 2020 level and start to build a proper base as copper has already done so here. So maybe starting to form a bit of a bottom here on the silver market too. To be decided, of course, by the non-farm payrolls, which we have today as well. Silver definitely has some work to do, but it seems to be holding on to this support. If it does break 1950 and we can get a break of that, I'll be looking to then see what sell short opportunities we have, taking it down to 1938. And then below that, we could get a really nice move down to around the 19 level, which would be about 90 from the current price, represent almost a dollar move on silver. So very much dependent also on the non-farm payrolls that we see coming out today. Finally, just want to take a look also at the coffee market. So coffee had a really nice pullback here. It's working particularly well off our key Fibonacci levels. We can see where we had that pullback after produced a nice inverse hammer going back 3 weeks ago. We've moved back, found some support at major fib level 167.68. We're just consolidating between these levels at the moment, awaiting further direction. So we're going to be just looking at either a break of those major levels, so a break of 167.68 or a break to the upside above 180.47, whilst it still consolidates, and then we'll be looking to take the breakout trade. So definitely plenty keeping an eye on today ahead of non-farm payroll, but of course do make sure you monitor the US dollar index. That will give you a good indication, particularly on the news when it breaks, as to where gold and silver are going to move to next. Okay, so just going to go on to some of the 6 major news announcements that we have as we go into next week. And just coming back to you on your question there, Jay, so your regarding indicators, I'll discuss that a little bit at the end of the webinar. How you can find out more just regarding how we use our charts and the various indicators and so on. So I'll go into that very shortly. So the week ahead, so the 6 key events looking forward that we need to pay attention to. Of course, today we have the US non-farm payrolls. That is at 1:30 p.m. GMT, 8:30 m Eastern time. The US non-farm payrolls, they measure the change in the number of people employed during the previous month. It excludes the farming industry. Job creation is the foremost indicator of consumer spending. It accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, which is going to be bearish for gold and silver, while a lower than expected reading should be taken as bearish for the US dollar and bullish for gold and silver. Then we have next Wednesday, of course, for all you oil traders, you energy traders, you do want to note this. We have the oil inventories at 3:30 p.m. GMT, 10:30 m Eastern time. The data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. And that's often the correlation we see. Thursday, 10th of April, US import price index at 1:30 p.m. GMT, 8:30 m Eastern time. That import price index measures the change in the price of imported goods and services purchased domestically. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then we have next Thursday, of course, the US natural gas storage is great for your natural gas trading, 3:30 p.m. GMT, 10:30 m Eastern time. The Energy Information Administration, the EIA, natural gas storage report, they measure the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. It's important because the CAD is, of course, correlated to oil price. And then next Friday, the 11th of April, we have at 1:30 p.m. GMT, 8:30 m Eastern time, US PPI. So the producer price index The PPI measures the change in the price of goods sold by manufacturers. It's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then next Friday, the 11th of April at 2:55 GMT, 9:55 Eastern Time, we have the US Michigan Consumer Sentiment. So the University of Michigan's Consumer Sentiment Index rates the relative level of current and future economic conditions. So two versions of this data released 2 weeks apart, preliminary and the revised. The preliminary data tends to have a greater impact, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So those are really the 6 key news announcements you want to note for your commodities trading as we move into next week. Jay, to go back to your question here, regarding indicators that we're using and how to find out more about confirmation. You can certainly find out more about how to trade the Gold and Silver Club key strategies. We have workshops upcoming in the month of April, which you can find out more about. I'll show you details for that very shortly, how you can get more information. You can also join us live for our live trading room, where we trade various news items live, and you can also become part of our international Gold and Silver Club traders community. So very simply, to find out more about that, it's an international community of traders that we have. You can request information on the live trading room and coaching programs. Very simply, just go to www.jointhegoldandsilverclub.com. Yep, great stuff, Jay. Yep. By all means, if you'd like to get in touch, please do so on the following numbers. So you've got the London, the New York, Johannesburg, and the Budapest numbers at our offices there. So do get in touch, whichever is closer to you, or email us at office@thegoldandsilverclub.com. You can find out more. And of course, make sure you subscribe to our newsletter. You'll get free weekly gold, silver, oil, natural gas, commodity news, live market analysis, and prices. So very simply, just go to our website to find out more about that. And I will leave these details on the screen for you all as well. Okay, fantastic. So we've got lots to look at today. It should be an exciting day of trading on the markets. I wish you all good luck for today's trading, and of course next week as well. We'll catch you on the next one. That is a wrap for today's session. So have a great weekend, everyone, and we'll see you same time next week. Okay, so take care and thanks.